Good morning and welcome back. This is the third section of our tutorial on the final account of a sole trader. In this tutorial, I will solve a complete examination questions using the trial balance of Gingle Bell Venture. This example will help you understand how to treat important year-end adjustments and correctly prepare the final accounts. Pay close attention because this type of question is very common in WAEC, NECO, NAPTEB, university and professional examination. Grab your writing material. Let's play over this question. Now the question is taken from the trial balance of Gingle Bell Venture. In this question, there are so many adjustments in the question which you will learn. There's adjustments in stock, adjustment in so many places, in so many areas of the question. So let us go. Now the question reads. The following is the trial balance extracted from Gingle Bell Limited as at 31st August 2024. Capital is 710,000. Purchases is 930,000. Turnover is 1,001,218. Then repairs is 16,960. Motor car is 319,000. A building is 200,000. Bank is 10,800. Furniture is 29,200. Salary is 172,120. While discount allow is 21,220 and discount received is 16,280. Drawings 48,000. Insurance 4,960. About debt 7,180. Allowances for bad debt 2,800. Our receivable is 104,260. Payable is 80,700. General expenses is 31,720. While stock as of September 2023 is 126,000. Then car expenses is 6,360. Then the total is 2,027,780 in both the debit side and the credit side. Now the information is that the following matter are to be taken into consideration. 1. Inventory as at 31st August 2024 is 117,000. Salary outstanding is 6,360. Prepaid insurance is 900. Bad debt is to be reduced to 2,000. Gingle Bell withdraw goods value 4,000. For personal use. Repairs to building includes 13,000 in respect of building alteration and improvement. 7. 1/3 of motor car expenses represent the cost of Gingle Bell motoring for private purpose. You are required to prepare A. Income statement for the year ended 31st August 2024. B. A financial position as at that date. So these are the adjustments As we know, all adjustments are treated twice. So let us go. Then the first thing we will do is to prepare the trading account. In the trading account, we have one adjustment here. The adjustment in the trading account says Jingle Bell withdraw goods worth £4,000. When goods are withdrawn, then it will be removed from the purchase in the trading account. When goods are withdrawn, it will be deducted from the purchases in the trading account, and that is the adjustment, the only adjustment in the trading account here. So Jingle Bell Venture income statement as at 31st August 2024. Now the first thing we put there is the unit of account. The unit of account is in pounds. It's in pounds. Okay, the unit of account is in dollar. So we first of all put the units. If it's in naira, you put in naira. If it is pounds, you put in pounds. So there is a column for adjustments. That column is written adjustment in ash color. The adjustment we have there is that Jingle Bell withdrew goods worth $4,000 for personal use. Business is separate from ownership. So this amount, 4,000, will be deducted from the purchase. Anytime good is withdrawn by the preparator, the adjustment will be done in the purchases section. So the first thing we will do here is to bring down the sales or the turnover. When you hear turnover, it means sales or revenue, and the revenue is 1,218,000 done. And if there is return inward or sales return, you deduct it. And if there's no sales return, then the value becomes sales return. Then you go to the other side and compute cost of goods sold, which begins with the opening stock. Cost of goods sold is opening stock at purchases. The purchases here now, we have to adjust the drawing from by Jingle Bell Venture Director. He withdrew goods worth $4,000. So the drawing there is to be 930,000 less 4,000. Purchases there is going to be 930,000 less 4,000. That's the adjustment there, and it becomes 126,000. So purchases is 926,000. Now there is no carriage, there is no wages, there's no other direct cost. So the two items there become the cost of goods available for sale, which is now 1,052,000. Then when you remove closing stock from this figure, closing stock is 176,000. What we have is cost of goods sold. That is opening stock plus purchase less closing stock is cost of goods sold or cost of sales. And the cost of sales in this figure becomes 876,000. Then the gross profit is net sales less cost of sales. It becomes 1,218,000 minus 876,000, and that will give you 342,000. So the gross profit is 342,000. So we just balance off by bringing down the turnover or the net sedan. So By this, we've concluded the first section of the income statement, which is what? The trading account. The trading account and the profit and loss account are not separated, but we are doing this separation because of the length of our screen. We are supposed to continue down by carrying gross profit to the credit side, and we start adding other income, as we are going to see soonest. Now, this section is a continuation of the income statement, where we are going to take the gross profit to the credit side, then we add other income. There is also a column for adjustment for all items in the adjustment section of the questions. All items in the adjustment section of the question are to be treated twice to complete the double entry. Now, gross profit brought down. Gross profit brought down is $342,000. $342,000. That is a gross profit brought down. Did we have other income? Yes, we have discount received from the question, and discount received is $16,280. Then there is a reduction. There's a reduction in the allowances from bad debts from 22,800 to 2,000. So it is the reduction that becomes income. The reduction becomes income. That is 2,800 minus 2,000, and the reduction is 800. So 800, which is the reduction in the allowances for bad debt, becomes an income. So we take it there. If it were to be increased, it will have become an expenses. But since it is reduction, it will become an income. That is to say, a reduction in all provision become income, while increase in all provision become expenses. So that's why we have reduced allowances for bad debt is $800. So we proceed to the expenses side. The first expenses there we are going to take is salary. The value of salary in the trial balance is 172,120. But there is an outstanding salary in the adjustment section. Outstanding salary is 6,360. So the salary for the period will become 172,120 plus 6,360, and that will give us 178,860. That the salary is now 178,480. Salary is 178,480 because of the outstanding salary of 6,360. Now, the next thing we are going to take a look is insurance. The value of insurance in the question is 4,960, and there is a prepaid insurance of 900. So the insurance for the period is 4,960 minus 900, so that insurance for the period becomes $4,060. So we bring it here, insurance. The value of insurance now becomes $4,060. $4,060. That is the insurance for the period. The prepayment is going to the balance sheet as an asset, while outstanding in salary is going as a current liability. Now the next thing is car expenses. Car expenses is 6360, and 1/3 of this car expenses is the motoring, the private motoring of Gingle Bell Venture is private. So the other one that is for the business is the 2/3, which is 4,246. So the motor expenses here now the car expenses here now is 4240, while the other one is going to drawing in the balance sheet. That is to say, 2121 become drawing and is going to the balance sheet. Now, discount allow is an expenses. There's no adjustment information for discount allow, so it remains the same, 21,220. The next one is bad debt written off. The bad debt written off is an expenses, and so there's no adjustment information there, so remain at 7,180. Then we get general expenses, no adjustment information in the question, and it remains as it is in the trial balance. It remains as 31,720. Now we talk about the repair on building. Out of the repair on building, they say 13,000 out of the value of the repair in the building represents a capital expenditure. According to the question, they say 13,000 is for alteration and improvement. And when you spend money for improving a non-current asset, that amount is to be capitalized. What do I mean by capitalized? That amount is to be added to the value of the non-current assets. That is what it means by capitalized. So we have to capitalize 13,000. So we remove 13,000 from 16,960, and the balance becomes 3,960. This 3,960 becomes the value of repair on building that will be taken toward the profit and loss account. So building repairs now will become 3,960, while 13,000 will be added to the value of the building in the balance sheet, as it is toward capitalized, or it is a capital expenditure. Now, thereafter that, we cast and get our net profit by taking the total of the debit side and removing it from the total of the credit side, and our net profit becomes 108,220. Then we try to balance off, and we're getting 359,080. 359,080. By computing the net profit, we have concluded this section of the income statement. So the next thing we are going to take a look at is the statement of financial position, also known as the balance sheet. The balance sheet or statement of the financial position is just a picture of all the assets and all the liability. Asset in one side and liability in the other side. And because it conforms to the accounting equation, the balance sheet is always what? Balance. All things being equal. If there is no error, no mathematical error, balance sheet must always balance, because it conforms to the accounting equation. That's why they say the accounting equation is also the balance sheet equation. Then capital, on the liability side, we start from capital. Capital is the liability of the business to the proprietor, and the value of the capital in this question is 710,000. Then the adjustment here is capital add net profit less drawing. I repeat, capital add net profit less drawing. Capital add net profit less drawing. So the net profit there is 108,220. And the drawing is to be computed because there are three types of drawing in this question. And the first drawing was the one in the trial balance, which is cash drawing of 48,000 by the proprietor of Gingle Bell Venture. There was a cash drawing of 48,000. There was another drawing in form of car expenses, which is 20,120. Car expense on private use. Anything private use become drawing. There is also drawing of goods worth 4,000. All this drawing must come to bear. And when we total the drawing, we'll be having 54,120. So that is the total value of drawing, and it will be deducted from what capital? Adjustment capital is capital add net profit less drawing. Now we take the current liabilities. After deduction, we take the current liabilities. Are there any current liability? Is there any payable or any outstanding expenses? In this question, there is a payable, which is equivalent to creditor, and it is 80,700. And there is an outstanding salary, that is accrued salary that have yet to be paid from our adjustment in the trading and the profit and loss account, and that value is 6,360. We finish what we need to compute in the liability side. Now we are going to the asset side. We are supposed to title this thing long-term liability, current liability. Because of the size of our screen, we decided to just show it in form of liability and assets. And the other side of the current, the asset side, we are supposed to begin this one with how permanent are the assets. So we are supposed to begin this side of asset with land and building. So, but we began with motor vehicle, which is motor vehicle is 31900. Then building, do not forget that the value of building in the trial balance is $200. But the repair, there's a capital expenses on building, so we have to capitalize that expenses, which is what? 13,000. Capitalizing it means adding it to the value of the building. It's a capital expenditure. It is the revenue expenditure that will move to the profit and loss account, but the capital expenditure will be added to the value of the building. So the building value of the building now becomes $213. So building becomes $213. Now the next asset is furniture. Furniture remain furniture. There is no adjustment information, so we bring down the value of furniture as it is in the balance sheet, which is 29,200. Inventory, that is closing stock, is $176,000. Then receivable, which is equivalent, or that is another name for receivable, is debtors. The value of receivable, the value in the trial balance less allowances for bad debt. And the allowances for bad debt, as we can see in that adjustment, was reduced from 2 28 to 2000. So 104,260 minus 2000. So we're now having 102,260. So receivable value becomes 102,260. There is any other current assets? Cash at bank. Remain cash at bank, and the value is 10,800. 10,800. Is there any prepayment? Prepayment, there was a prepaid insurance. Prepaid insurance is 900. Prepaid insurance is $900 according to our computation, according to the information in the adjustment section of the question. And by this, we have finished all the assets. And so by the time we cast the calculator, we still have the same balance, 851,160 at the credit side and 851 naira 160 at the debit side. That is to conform with the accounting equation. Asset is equals to liability, capital plus what? Liability. Or asset is equals to equity plus liability. On this note, we come to the conclusion of this third section of the tutorial on final account. On final account, we have final account part 1, part 2, and this is part 3. Do not forget to like, do not forget to share, and not forget to subscribe to our channel so that in subsequent